So we like healthcare as a defensive sector. We like medtech. Do you have a pick for us? A particular name you're looking at?
I have several, but there's one that I was looking at earlier today, and I wanted to bring this to this roundtable discussion. This is the one that we discussed in the third quarter of 2018 called Tabula Rasa, symbol TRHC. It looks pretty interesting.
I remember that from third quarter last year. It stood out to me. 100,000 deaths annually are caused from adverse drug effects and 125,000 hospitalizations.
If you look at the background, it's quite interesting. Over 4 billion prescriptions are filled in the United States every year, of which 40 to 50 million prescriptions are identified as adverse drug events, or ADE they call them. And then what you mentioned after that, about 100,000 deaths annually take place from these ADEs. It's crazy.
Those are scary numbers.
It's absolutely crazy numbers. I mean, people go to get these drugs to get a treatment, but I think we underestimate how much just abuse takes place with these prescription fills. But yeah, pretty scary numbers out there.
So why now? Why do you like TRHC again? What are you looking at?
Let's go back. What we discussed first in the third quarter, because I think the points that were discussed back then are still valid now. In fact, they have been more reinforced with the most recent earnings report, as well as some of the analyst commentaries that have come across. A lot of CMS rule changes have been taking place since summer of last year. There were two major CMS rule changes for the Medicare that took place. And those changes that happened last year basically created a tremendous opportunity for the company's opioid solutions business, which essentially predicts and prevents unintentional opioid use by directing or addressing one of the most critical health concerns in America. And so these CMS changes that are coming straight down from the government are actually playing in direct benefit to this company. The company has also been quite aggressive with their recent M&A approach, acquiring basically assets that will help them maintain their dominance essentially in trying to solve this opioid crisis in the country. So for all those reasons, so I think the things that we discussed last year are still valid, perhaps more valid now than what we have seen before.
Wasn't there a pretty interesting note from Piper Jaffray a couple days ago with some good points?
Yeah, and I think Piper Jaffray touched upon two most important things, which is exactly why I believe the stock is starting to break out. If you look at technically, it is finally starting to run through a major trend resistance over here. The 2 points that made, I just touched upon how last year in 2018, there were two major CMS rule changes that work in the benefit of this company. Well, guess what? There's now one more CMS rule change that happened. And this one was a proposal. It has not been implemented yet, but what this proposal says is that beginning in 2019, I think it's effective as of April 1st, but I have to check on that. But beginning in 2019, the Medicare Advantage drug plans will need to achieve 85% comprehensive medical review or CMR completion rate to basically earn 5-star. Why is this important for this company? Because back in 2017, they acquired a company called Sinfonia RX. And then just a couple of weeks ago, they acquired another company called Prescribe Wellness. And both of these companies now have the XCell opportunity. XCell is a particular product proposition that the company has to address this very CMS rule change that is coming down the pipe. Without confusing with more detail, just know that these CMS rule changes have been precisely designed to prevent any kind of opioid abuse. And that's exactly what the company is doing with these acquisitions as well. So the Piper Jaffray was making a case from this point on, you could see further acceleration in growth rate, and now you're seeing starting to break out.
It is breaking out now. We did have a 6-month lag going up into that, though, even with MedTech outperforming. Any reason why this thing's taken so long?
Yeah, good question there. And I think there's a couple of reasons for that. First of all, if you look at the 1-year chart, it had a remarkable run. I mean, the stock essentially doubled in a very short amount of time from April to September. right? So I think it was just getting ahead of itself a little bit too much, too fast. So a little bit of a corrective phase was necessary. That was part of it. And then secondly, in early 2019, they did a large $250 million, roughly $250 million secondary share offering, and that kind of depressed the stock for a while. And then I think the last part was simply just, there was a moment, I think in late 2018, early 2019, where the stock didn't really have a lot of news flow going in this. You know, opioid used to be a nonstop discussion on TV and networks, and it gets people excited, but you probably noticed it too. It just kind of disappeared for a while. You know, so I think all those factors, but I think these acquisitions and CMS rule changes are starting to bring this back to light.
Do you have a price target from here? How high can this go?
Yeah, this chart that you have in front of you, I highlighted some levels over here. First of all, in my opinion, this is a beautiful breakout over here. So the first natural price target on this is the first major VOP resistance that's coming up at $68 per share. I think it's going to get there very quickly, possibly next week. But maybe a small pause over there and a bull flag. But I think ultimately this thing is going to run to $80 per share. So from here at 65 to 80, we're looking at what? What percent is that? About 25%, right? So so I think there's substantial upside in stock from here. Volume has been impressive behind this too. So I think it's a name that's going to continue for the second quarter.